Sometimes in markets certain events occur which can conspire to give an opinion that markets could take a certain direction. We have just been catching up with Bryan Noble from traderenable.com, who joins us now with some analysis of the Hindenberg Omen. You're going to be talking a little bit about some of the markets, including gold and silver, which we've spoken about before. But the Hindenberg Omen is a relatively new one on me, and I know that on your website there's some analysis exactly what it is, but it's to do with highs and lows over the New York Stock Exchange and the negative swing to the McClellan oscillator, isn't it? But give us some more detail.
Yeah, it's been incredible. You know, if you go back to since January, the multi-highs that we've had in the S&P and the Dow, internally the market has actually been very weak. As we know, the FANG stocks have driven this market to new highs. The McClellan oscillator basically is a little indicator that measures the internal readings of the stock market. It tends to go from minus 250 to plus 250. Obviously, minus 250 we're oversold, plus 250 we're overbought. Incredibly, with the Dow near all-time highs and the S&P near all-time highs, the McClellan oscillator has been negative for most of the last few weeks, and as a result it has generated 6 Hindenberg Omens, the last one which we had yesterday. And this Hindenberg Omen, you need 2 of these within a 36-day period for a confirmed Hindenberg Omen, and we've had 3 confirmed Hindenberg Omens since yesterday, and we've only had 46 since 1986. And in just one more point on that, since 1986 there's only been 1 crash in the stock market in the States without a Hindenberg Omen. So going by my analysis I was looking at this morning, there's a 28% chance, mad and all as that seems, that we're going to have some sort of a crash between now and October.
Okay, so to measure this, you've been looking at the September contract for the S&P 500, haven't you? So extrapolating from what you've just said, with these record highs that we've had, which as you say has been driven by just a handful of stocks.
Yes. And
so there's 28% chance of a crash. If that does happen, explain more about what we could see.
Well, if you go for the fair value for the S&P is 1655, and here we are trading at 24.30 in the September contract. So we're miles overbought. I haven't gone short yet. This evening is a big day. If you go back to January when the dollar had a key month reversal, the dollar got hit 5%, and we've seen what's happened since then. This evening, 24.18 in the September futures contract. I know it's a good bit, it's 12 handles away from here, but if we were to close below 24.18 tonight in Chicago, then that's a downside key week reversal, which would be the first warning sign that things are not good. You know, Trump has not been able to get anything you know, that he said, all this reflation trade, it hasn't happened yet. We still have no inflation, there's no sign of inflation. Money supply in the States has contracted after the first 3 rate hikes, and after the last hike 10 days ago it's going to contract further. So I think the US, but what they're doing, if they're going to reduce the balance sheet, it's going to do more tightening on the economy when it can't really afford it. So I think you know, they are going to drive this economy into a recession, and you know, if the 10-year bond market starts to invert below the cash rate, well then that'll be the first sign of a recession is only around the corner.
Okay, so let's assume we get this key week reversal and we get this Hindenburg Omen work out, and you're talking about a 28% chance of some sort of market correction by October. On this chart here, how far down does it go to fulfill your expectations?
Well, you know, like I am not short yet. You got my blog is basically buying the S&P for most of the last few years. Yeah. But you know, 24.18 be the first warning sign tonight. 24.01, which is the March 1st high. If we close below there, that'll be a second warning sign. And I suppose we really need to break 23.50. If we get below down, 23.45, 23.50, which is the low from mid-May. If we get below there, then I think we'd have certainly put in some sort of a top. My own view personally is I think we're going to get a bit of a nasty sell-off over the next few weeks. We'll have one more rally into probably to new highs, and then the real McCoy won't come until the back end of this year, early next year, when you know when it's shown that the US economy is not as strong as it was. And the big worry, you know, if you look at the payroll numbers every month, there's no average earnings, so there's no wage inflation, which is incredible with a 4.3% unemployment rate. That we're not seeing wage inflation, and until we see wage inflation, it's very difficult to be long.
Okay, here we are now, with about 3 or 4 hours to go before the end of European trade on this Friday. If we don't get that key reversal by the end of New York trade today, what else would you be looking for next week, which might give you some sort of hint that the Hindenburg Omen might still play out in October? Well,
we had a warning 2 weeks ago today. The Nasdaq got hit for 250 points, just out of nothing. The main stocks just got slammed. They've rebounded somewhat. So I'd be looking at, if the Nasdaq can break the low 2 weeks ago, then that's another warning sign. If you go back to Europe, both the DAX and the FTSE had sizable key day reversals last Tuesday, so it's another worry. So you know, the central banks don't want this, obviously, because they pump so much money in. And if you go to Vegas, it's the house that wins. If you're trading the markets at the moment, it's the central banks. The Swiss National Bank, incredibly, for a population of 8 million people, allegedly they have $80 billion invested in the US stock market. Allegedly, they're the largest holder of Facebook and Apple, and they've 20 billion invested in European stocks. So it's an incredible with a population of 8 million people. So obviously they're trying to defend the franc. Their interest rate, their overnight rate is minus 0.75%. So people are getting nothing for their money. So they're being pushed into the stock market. Yeah.
Okay. Just quickly go back to this September contract chart for the S&P 500. I mean, the level here, talking about 23.48 or 23.45, whatever, is not particularly far away from where we are. This wouldn't constitute, in some people's books, a crash. How far back does it have to go to fulfil expectations that the market has corrected sufficiently?
Well, the markets always go back to the mean over time. So if we're saying the mean on the S&P is 1655, there's your crash straight down to, there's a third of a move down to there. And one standard deviation below 1655 is 1165. Now, I'm not saying we're going to go there, but markets tend not to stop on a dime. This is not going to be straightforward. We've seen any time the market has sold off over the last few years, and we've had some decent sell-offs. We haven't had a 10% correction in over 18 months. The market's always been bought back again. So, and I think the Fed are trying to get rates up to a level that if they know themselves that if the economy gets into trouble, then they can do their QE again and cut rates, which I've no doubt will happen in the event that one of these things is going to.
How does the dollar play out over the back of this? Because we've seen, let's take Eurodollar for example. It's been flat trading the last few weeks or so. It's been very difficult to get a bid on this. Where do you see the dollar? Well,
I've been on your show now for the last year and a half. I've been very bearish of the dollar. That's kind of changed with me over the last few weeks. The daily sentiment index is extremely bullish towards the euro. The large speculators, i.e. the hedge funds, have their largest position since August 2015 and May 2016, when the euro was trading at 117 and 116. Here we are trading at 111.60. Interesting to see the IMM numbers tonight when we have the positioning for the euro. The daily sentiment index towards the dollar index is near single digits. Again, historically, when you have something with a low DSI reading, the market tends to rally. I'm looking for the dollar to rally probably a third to a half of the sell-off it's had since January. But the problem is, the euro had that low 103.80. The problem to get this, you're probably going to need a stock market crash for the dollar to firm from here. If you go back to the euro before the first round of the French elections, there's a huge gap, as you can see in the chart there, 106.30. I think if the euro ever got back to fill that gap, and as you know, all gaps get filled in the markets at some stage, I'd be a very large buyer of the euro if we ever do, in the event of a crash, sell off to those levels.
Yeah, okay. We've spoken a number of times about silver. I want to take a look at both precious metals, if I can, to how to trade these. We've seen a particularly good week, I think, actually, for precious metals.
Yeah, silver's been my favourite trade. The people following my blog, we managed to get out at 1769, got back in a small basis from 17 down to 1640. I'm currently long at 1668. Silver really needs to break 1705 for the bulls to reaffirm again. On the downside, 1580 to 1610 is massive. 1580 to 16 was the low we had in December. So as long as silver can hold over that 1580, 1610 area, I think silver's okay. And I think eventually we will take out this 1860 double top that we've had and go back to the July high of 2104 of last year.
Okay, all right. So you're bullish on silver and ditto gold?
Yeah, gold, I much prefer to be long of silver than gold. It's not as volatile. Gold has held the 500 week moving average at 1237. It had a nice spike yesterday. It's held today. To really get bullish on gold again, you really need to see 1275 getting broke. If we break 1275, then I think we'll head it back up to 1300 and possibly 1320.
I was going to say 1320 is the one to break, isn't it? We haven't seen that since, November last year?
Exactly.
Yeah. Okay, so bullish on spot gold. Look, Bryan, thanks indeed for joining us. Your look at the markets and indeed the Hindenberg Omen. And as I said, if you wanted to find out some more about that, tradernoble.com is the website to go to, or Bryan explains it in more detail as to just what it means and the potential for the markets.